Oil daily forecast, January 2nd, FXEmpire.com. The light sweet crude market, as you see in front of you, fell slightly in very thin trading on Friday. The market continues to look buoyant, but the $100 level above keeps fighting back. The 105 level is actually the level that needs to be cleared in order to see this market rise in any significant amount. The economic slowdowns that are coming in various economic zones around the world should continue to keep prices lower for the time being, we see going forward. But we see a couple different possible technical setups. One is a downward channel, which is on the chart now, or the possibility of a flag. And of course, if we break over the 105, then it is a bullish flag, and we're talking much, much higher prices. That would more than likely only come with some kind of really strong economic news from somewhere, which we just don't see happening. So for now, we just assume that the downward channel holds. If they can break above 105, then it suddenly becomes a long-term buy and hold type trade to about the 135, maybe even as high as the 140 mark based upon projections on this flag. Currently, we are willing to sell, though, on signs of weakness, as it does appear to be struggling, and the highs are starting to get lower as well as the lows. Looking at Brent, it's a little bit different picture. Friday printed the second hammer in a row. Thursday was a hammer as well, as you can see here on the chart. It does suggest higher prices, but we are currently stuck basically in the 10 or 102.50 to 112.50 area as consolidation for most of the year, quite frankly. And as such, we think this will continue to be a little bit choppy, and we are in the middle of the zone. Because of this and the fact that it looks bullish, we are actually waiting to see if we can get a pop up to about 112.50. From there, we would consider selling again, as it has been such a strong consolidative market. Of course, if we fall, then we would consider possibly buying on signs of strength at 102.50 as well. In the meantime, though, we just sit on our hands and wait for the market to get to one of these outer limits and continue to play the range as it has worked for so long.